Okay. What we're going to do next is I want to work through a problem so you have the opportunity to see what it looks like to journalize transactions and post them to the general ledger. I'm going to do this on a spreadsheet. That's as close as I can make it look to what your big homework problem is going to look like. So in just a second here, we're going to switch to a spreadsheet and we're just going to start working through this problem. This happens to be problem 2-1A. This is on page 88 of your textbook. You won't see this sheet again, so if you want to follow along in the transactions, I'll read them as we go through. But it might be useful for you to have this in front of you as we go through the remainder of this video. So remember, 2-1A. A couple other things. They give us some check figures down here. Don't lose sight of that, right? So they tell us when we're on track and give us a little information so we know if we've done things correct or not. So now we're going to take a look at the spreadsheet and see actually how it is we go about recording transactions and posting them to the general ledger. We'll finish it up with that trial balance. Okay, our first transaction in problem 2-1 says Tanner invests $80,000 cash along with office equipment valued at $26,000 in the company. So this is a little bit more complex than we've done before, because now he's not only contributing cash to the company, he's also contributing out of his own personal pocket office equipment to the company. So we're gonna deal with both of those in exchange for the capital that he gets back. So this happens on April 1st, right? So we know he's contributing cash to this thing. I'm going to debit cash for $80,000 because that's what he contributes, right? He also contributed office equipment, right? Contributed office equipment to the tune of $26,000. So there's our two debits. Remember, debits are flush to the left, right? And then we're going to credit K Tanner capital for $106,000. So let's just take a peek at that for a minute, right? He contributed to the business and assets go up and equity goes up, right? Assets, this time two assets go up. Cash goes up with the debit and office equipment goes up with the credit. K Tanner capital goes up with a credit. So two debits, one credit, but we still follow the rules of debits equaling credits. We're just going to continue and journalize transactions for a while here, and then in a little bit we'll go post and we'll look at how that works. The next one says the company prepaid $9,000 cash for 12 months rent for office space. Here, this is a freebie. It says debit prepaid rent for $9,000. This happens when on the 2nd, right? So for 2, debit prepaid rent. Prepaid rent is an asset, right? It's rent we pay in advance of using it up, right? So it's something that I own, right? It'll become an expense to us at some point, but not just yet. So we increase the asset prepaid rent and our cash goes down with a credit. So $9,000 there, right? So now look at those two journal entries. Both of them are what? Debits first, flush to the left, credit second, and indented, and the debit and credits, or debits and credits, the dollar amounts are equal on all of them. Next one's another one that's got 3 pieces to it, right? So on the 3rd of April, the company made credit purchases for $8,000 in office equipment and $3,600 in office supplies. Payments due within 10 days. So this tells us what? We go down to the office supply store and we buy a computer and a fax machine, a bunch of stuff, and a bunch of Post-it notes and pens and all those kind of things, right? And we are going to record them. Both of those things are assets to us, right? The equipment's an asset and the supplies are an asset, at least until I use them up. So we're going to start with what? The 3rd of April. Now, I bought office equipment. It's an asset to me, so I'm going to debit office equipment for $8,000. And I'm going to debit office supplies for $3,600, right? And the total of all that stuff I owe to somebody, right? So I credit that to accounts payable. I credit that to accounts payable, and the total is $11,000. $600, right? So again, debits equal credits. Here we had two debits, $8,000 and $3,600, which equals the $11,600, right? Debits first, flush to the left, credits indented a little bit, right? So here's our general journal, our book of original entry, where we're first recording everything, right? Next transaction we have is the 6th. So the company completed services for a client and immediately received $4,000 in cash. So we went out and we did work for somebody, right? We went out and did work and they paid us right away. Bonus for us, right? So we get cash and we've earned revenue, right? We get cash and we've earned revenue, and this transaction happened when? 4/6. We know we did work and we got paid cash. So I'm debiting cash, $4,000. And why did I get that cash? Because I earned it. So service revenue is my credit. That's the revenue account we use when we earn things in this particular problem. One thing that I probably should have mentioned before we started is everything that goes in here has to be on that list of accounts they gave us in instruction number 2. And if you look over here on this side of the worksheet, you'll see I have ledger accounts for cash and accounts receivable and office supplies and prepaid insurance and prepaid rent and office equipment and accounts payable and K-Tanner capital and K-Tanner drawing and service revenue and utilities expense. Those are the only words that can go in this journal, because all of these transactions eventually have to come over to this general ledger. So that's where we are. Let's get back on our transactions. Right after the 6th comes the 9th, where we completed a $6,000 project for a client who's going to pay us within 30 days. So now we're doing work, right? We're doing work for somebody, but we're not getting paid yet. But they owe us this money, right? They owe us this money, and we call it when they owe us. Oh, what happened there? They call it when we owe when they owe us money, right? Accounts receivable. And what do they owe us? They owe us $6,000, right? Why do they owe us money? We did work. So we increase our revenue account with a credit. So there we recorded doing that work on account. Okay. Generally we would go all the way through and journalize and then post. But let's just stop right here and post these transactions that we have done. Posting just means what? We move from the journal to the ledger. Now, the way to do this, start at the top, right? Don't try and pick out each individual account. Start at the top and work our way down. So the first transaction that I have is April 1st was a debit to cash. We're moving to posting now, right? Debit to cash of $80,000. So I come over here, look, and I find my cash account. 4-1. Now look, I've labeled up here the debit and credit side. We know that cash increases with a debit, right? So that helps us out. Accounts payable is a credit, balance account increases with a credit. Cash got this debit of $80,000. Give me just a second here. I thought I had this fixed. There we go. Gets a debit of $80,000. So the balance is $80,000, right? So that little piece of business for cash is all done. The next thing that we do is we find office equipment, right? Where is office equipment? There it is right here. 4-1. We had a debit of $26,000. No beginning balance, so that is my balance, right? $26,000. So we posted those two. Now we're at K-Tanner Capital, and that's a credit, right? So I come down here to K-Tanner Capital. 4-1. Now look, this is a credit balance account, right? So you can see right there that we increase it with a credit. Oh, I gotta format that different. There, April 1st. April 1st. So we get a credit of 106,000, one too many zeros, right? There we go. And my balance is 106,000. Now you'll notice that this is a little bit different than the one that I showed you in the last video, in that this just has a balance column, right? Just a balance column. So what that means is when it's an account like Capital, which has a normal credit balance, this is a credit of 106,000, right? An account like Cash, which has a normal debit balance, this balance means it's a debit balance, right? So this is a little bit simpler form than the one that we went through in the example. Okay, now let's go through and do April 2nd, prepaid rent debit of 9,000 bucks. So I come down here and I find prepaid rent, and I know that is for 2, and it is a debit of 9,000 bucks, which is my balance. Oh, 9,000, right? So there I've posted the first half of this, right? The second half goes to Cash as a credit, so I come up here and I go 4, 2, and we credit Cash for $9,000. Okay. Now, to update this balance, I'm going to build a little formula, but what we're doing, this is a debit balance account, right? Meaning that I'm going to take this balance and whatever I did on the debit side, I'm going to add, and the credit side, I'm going to subtract, right? So I just do that with a little formula. So I go equals the $80,000 plus that line's debit column minus that line's credit column, right? Well, look at that. That's my new balance, right? So now I don't have to do the math. The spreadsheet does it for me. So I posted that credit to Cash, right? Okay, now April 3rd. Office equipment, $8,000 debit. So I come up here. Oh, that's another one where the date's goofed up. There we go. This will probably be the same way. 4, 3. So what that's doing is just a formatting thing, right? So if I go up here and I make it, and what I'm really doing is I'm making it a date, right? So if I make it like this, and I select that 2-digit month or 2-digit day and a 3-digit month, it fixes it for me. Where were we? We were debiting office equipment for $8,000, right? $8,000. Okay, and now 26,000 plus 8,000, right? So I come over here and I build my formula, and I'm going to take this 26,000 plus this. I want to build my formula consistent, and we don't really need this minus the credit thing, but I'm going to put it in there anyway, right? So now I've got what? I've got $34,000 in office equipment. Next is office supplies, April 3rd. So 4-3, office supplies gets a debit of $3,600, and since we don't have a balance, that is my balance, right? That is my balance, is that $3,600. So now we have posted that both the debits from that transaction. Now we got to go back to the credit side, and we're going to pick up this accounts payable account. There it is right there. I'm going to fix that number thing right away before we get there. Okay, so we're at accounts payable 4-3. Okay, we credit accounts payable for $11,600, right? And accounts payable is a credit balance account, so it has a credit balance now of $11,600. So now that means what? We're posted all the way down to here. Let's go do these last two, and then we'll start. We'll journalize some more, right? April 6th. Good for us. We get some cash, right? April 6th, I get cash of $4,000. And I can copy this formula, right? I'll build it again just to show you how it works. I take the balance and I add debits, subtract, credits. Boom, there it is, right? So now we got 75,000 bucks in cash. Why did we get that cash? Because we earned it, right? Service revenue. So I come down here and I find service revenue. I find service revenue, and what day do we do this? 4-6, a credit of $4,000 and a balance of $4,000. So that's posting, right? Now look what we're doing. Now we have a balance in all these accounts, right? If I want to know how much cash I have, I go back right to the very last number in this thing. Tells me. The last thing, April 9th. Debit to accounts receivable. People owing us money, right? So 4/9, we debit accounts receivable for $6,000. Means my balance is $6,000, right? And I credit service revenue for 9 because they owe us because we did work, right? So I'm going to credit revenue for $6,000. Now, this is a little different because this is a credit balance account, right? So I'm still going to take the balance, but now I'm going to subtract debits and add credits because it's a normal credit balance account. Accounts increase on the credit side. And it shows that we've earned $10,000 in revenue. Okay, the transaction on the 13th says the company paid $11,600 cash to settle the account payable created on April 3rd. So let's go back up and look. Remember on April 3rd we bought all those that office equipment and office supplies and we bought it on account, right? Now we're just paying that bill, right? We're paying that bill. When are we doing that? We're doing that on the 13th, right? So we know when we pay a bill, what happens? Accounts payable, the liability, right? That's got to go down. So we debit liabilities to make it go down. I pay it with cash. That's an asset. So I'm going to credit cash to make that go down. So debit to accounts payable. And how much did we pay? We paid $11,600. And we are going to credit cash. $11,600. There we go. There's the transaction on the 13th. Now on the 19th, we paid $2,400 cash for a premium on a 12-month insurance policy. Tells us to debit prepaid insurance. We debit prepaid insurance because insurance is an asset to us, right? It's something that we own until we use it up, right? So we're going to book that as an asset. How much did we pay for our insurance? $2,400. Oh, we paid it with cash, and we credit cash to make it go down $2,400, right? Now let's just keep carrying on with our journal entries. Company received $4,400 cash as a partial payment of the work completed on April 9th. So look up here on the 9th. They owe us $6,000, right? Now they're going to pay us part of that. They're going to pay us, looks to be about $4,400, right? So I get cash. That's always good. $4,400. Now, the other side of this transaction is accounts receivable, right? Because they don't owe us that money anymore. So I'm going to credit accounts receivable for $4,400. Cash goes down, accounts receivable goes down. We have the money, they don't owe it to us anymore. 25th, company completed work for another client for $2,890 on credit. So this is the 25th. We completed work for another client on credit, so that means that we've done work, we just haven't gotten paid for it yet, so it's accounts receivable. $2,890. So again, we $2,890, and we did work. They owe us that because we did work. So services revenue, increase in an asset, increase in our revenue account because we earn money, just have not gotten paid yet. Right? Accounts receivable, services revenue. 28th, Tanner withdraws $5,500 cash from the company for personal use. So now he's taking money out to put back into his own pocket, right? That's that withdrawal account. So this is going to be K Tanner withdrawals. Remember, withdrawals is a contra equity account, right? It means it's our equity, owner's equity, but it makes owner's equity go down. Contra means anti or against, right? And he's taking out cash. So we've just accumulated that $5,500 in a drawing. Because that's him taking money out of the business, right? We're going to see how that looks when we post that transaction. just a couple more to journalize. The 29th, the company purchased $600 of additional office supplies on credit. So on the 29th, we're buying what? We're buying more office supplies. That's an asset. I increased that with a debit of $600. And I haven't paid for them yet. I owe them the money, so I'm going to increase my accounts payable by $600, right? Have some office supplies, but haven't paid for them yet. I still owe them the money. Last thing we do this month is we pay our utility bill, right? So that goes to utilities. Oh, first I got to put the date. Not paying attention. 4/30. Utilities expense. We debit an expense account, makes that expense account go up because we're accumulating those expenses, right? We're adding them all together. Eventually we're going to take them away, but right now we're adding them all together, so we accumulate them with a debit. Cash goes down because that's what happens when I pay my bills, right? So there's the bottom half of the transactions that we've journalized, right? Now let's go through and post the ones that we haven't posted yet, right? Remember, we did up through April 9th, so we're going to start with this debit to accounts payable on April 13th. Coming over here to my ledger, and I'm finding accounts payable, and this is the 13th, right? So I'm going to take that debit of $11,600, right? Now I'm going to take and build my formula, right? I'm going to take my balance, and remember, this is a credit balance account, so that debit, I'm going to do what? I'm going to subtract the debits and add credits. And our balance goes to zero because we've paid it all off, right? But we got to post the second part of it. We have to post the credit to cash. So this again is 4/13. Credit to cash of 11,600, right? And then I can take this formula that's the same one, and I can just copy it and see where it says paste formulas. And now my cash balance is 63,400, right? Because I took 75,000 plus that minus that gives me my new updated balance. We posted the transaction on the 9th, right? Now let's go to the 13th. 13th is a debit to, or no, we just did the 13th. 19th, debit to prepaid insurance and a credit to cash. So look, there's our prepaid insurance account, right? And this is 419. We know, let me do that better. 419. We debit this prepaid insurance account for $2,400. It's a debit balance account, so our balance is $2,400, and we know that that's a debit, right? Then my next one is a credit to cash on the same date. So I come here and I do 419. Credit to cash of $2,400, and we know that makes my cash goes down. Now watch, I'm going to do this formula again, right? Same one. I copy it, click down there, and paste the formula. Look at our cash is going down, right? Okay, there's the 19th. The 22nd. We debit cash. We're getting cash on the 22nd. Notice we don't have to reanalyze these transactions, right? We're just moving things from this journal to the ledger. We're posting these transactions now. So 422 cash. 422 is the date. And cash gets a debit of 4,400. And we can just do our copy and paste that formula, right? Now we got some more cash again. Now we have some more cash again. The 22nd, we have to post this accounts receivable because they're paying part of this, right? So 422, they paid us what? $4,400, right? Now I'm going to build my formula. I take my balance, and this is a debit balance account, so I add debits, subtract credits, and they still owe us $1,600, but we've posted that transaction on the 22nd of April. Now, if we're going to the 23rd, we're selling things on account again, right? So, or the 25th, excuse me. The 25th, we're selling $2,890 worth of stuff on account. And I can do just like I did with cash, right? I can copy this formula and paste it. Okay, so there's the debit to accounts receivable. We've earned more revenue, so notice this is my services revenue account. And this is, what is the date? 4/22. And we've earned another $2,890, right? Now we've already built the formula, so again, copy and click and paste formula. Look at us earning $1,290, right? That's a good deal. So that was the process of earning. Now, K. Tanner withdrawals. We have to debit that drawing account because he took money out. He took money out on the 28th. Oh, I'm going to fix my format again. He took money out. He took out $5,500. So that's my balance in drawing. It's $5,500, right? But he took out cash, so I scroll up here and find cash. Oh, I look at my date again. I'm not even pay attention. 4/28 and $5,500, right? So 4/28, $5,500 on the credit side. We update our formula, and there we spent a little money, right? He took that money right out of that business. 29th, we bought more office supplies, debit of $600, right? So 4/29, debit of $600. And I don't have a formula. I can build it though. I can go this. It's a debit balance account, so I add the debit and subtract the credit. There's our balance in office supplies and accounts payable. It's a credit the 29th. So 4/29, credit of $600. I'm going to just copy this formula. Even though it doesn't have a number there, that formula is still there, right? So now we owe somebody $600 after we buy these office supplies. The last one we have is a debit to utilities expense. So I know that this is going to be off. I'll just fix that right away. So 4/30. We debit the expense for $435, and we credit cash for $435. 30th, and we credit cash for $435, and update my formulas, right? So now we've journalized everything and we've posted everything. So we have the general journal on the left side, right, where that's our book of original entry. That's where we originally recorded all of those transactions. And then the right side is the general ledger, or really kind of a surrogate for a T account. Means the same thing. We did what? We kept track of individual balances of accounts, right? Individual balances of accounts. So there's our spreadsheet, right? There are our spreadsheet method of solving this problem. This looks pretty close, I think, to what you'll see when you do the very last problem in the homework that's assigned for Chapter 2. We're going to do the trial balance next, so that'll be the next step that we do. Okay, the last step is to build a trial balance, right? So what we've done so far, we journalized everything in the journal, and we posted it to the ledger, so we now have updated balances in all of our accounts, right? We've gone through the whole month of transactions, and all that's left is to verify that our system's in balance. Well, at this stage of the game, that's all that's left. So I scoot over here a little bit. I've built a trial balance. I'm going to I don't want to go that far. There we go. So here's our general ledger. I've built this trial balance, and I went ahead and typed in all the names of our accounts. The names of these accounts are just the names of each of these accounts that we have in our general ledger. Okay. So we've listed all of those accounts and orders, and we're going to bring in the balances, whether it's a debit or credit balance. So I'm going to start with cash, 59,465. Right now, this is a debit balance account, so that's the amount that we're going to bring in is the 59,465. I got to make my numbers pretty. Okay, so there's cash right next to his accounts receivable at 44.90. We know that's a debit also. Office supplies also a debit balance, and it's a $4,200 is what we have, right? Now we have to scroll down a little bit, right? Prepaid insurance is our next one at $2,400, and prepaid rent at $9,000. Let's just remember those, $2,400 and $9,000. Both of those are debits, right? And then we come up to, oh, look at that, I forgot one. Okay, I forgot one, so watch this. I'm going to select that whole thing. I'm going to insert, shift cells down, okay. After prepaid rent, we should have office equipment. There we go. Office equipment's got a balance of $34,000. It's an asset, so it's a debit balance, right? The next one we have is accounts payable. Accounts payable, if we look right up here, we have a $600 balance, but it's a credit balance, right? Because it's a liability account. The next one is the capital account that has a credit balance of $106,000, right? Then we have drawing. Well, drawing is a contra equity, opposite of equity, so it's got a debit balance of $5,500. Service revenue is a credit balance, $12,890. And utilities expense, a debit balance account of $435, right? So now we've just brought all of those balances from the general ledger to the trial balance, right? To the trial balance. Now, let's make sure that our total's total, so I select those two and hit this auto sum thing. Oh, that didn't work at all. I got to do it a little bit different. I'm going to delete those. I'll select this, and now I'll hit the sum, and I'm going to select all of those cells because I want those to add all together, right? And then I'll copy that, paste that formula. Look at that, we balance. We got to make it look nice though, right? Oh, escape, click around. We got to make it look nice, so we're going to come up here to this borders, and we're going to go top and double bottom border, right? Look at, there we go. So trial balance balances at $119,490. Now, what this does for us is this proves that our system is in balance, right? That's really what that does for us. So we would be ready to go on to the next step. So, the short story, the summary of Chapter 2, right? What we have talked about is we've talked about what an account is, right? And how that T account represents the account for us, okay? Accounts are where we gather like things. We also looked at those rules of debit and credit in that little device, that picture that I drew for you. I can't emphasize how important that is, right? That's a big deal for us. The next thing we did was we learned how to analyze transactions using those T accounts and applying those rules of debit and credit. And then this last thing was we looked at the process, right? We know that the process is that we do what? If we're looking at an accounting period, we journalize, we post, we prepare a trial balance, just like the instructions in this problem 2-1A. So this is a really useful thing for you to go through to get an understanding of what we're doing so far. So that wraps up this little demonstration of problem 2-1A and using the rules of debit and credit to record transactions.